Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right, so before we start with today's discussion, please allow me to mention about an offer that will reduce your capital requirements for trading various segments like the NSE futures and the MCX futures. Okay, talking about the NSE futures, you can trade contracts like Nifty, Bank Nifty, SGX Nifty, etc. with just 6,000 rupees for one lot, whereas in MCX you can trade one lot of crude oil, copper, natural gas, etc. for just 4,000 to 6,000 rupees. Okay, for gold and silver, it will cost you around 10,000 rupees per lot. And not only this, you will be happily surprised when you get to know the other features that are being offered. I can't give you all the details here as there are many, but I will surely share all the details post you get in touch with me. In today's scenario, if you want to trade one lot of crude oil, you need to have a minimum of 1.6 lakhs as your capital, that is 1 lakh 60,000. Similarly, for Nifty, for just one lot, you need to have at least 1 lakh as your capital. Now replace 1.6 lakhs with 4,000 to 6,000 rupees and 1 lakh with 6,000 rupees. It does make a lot of difference to a retail trader like you and me, right? So that's the help I want to extend or offer. And if you are interested, then you can get in touch with me on the details that are being shown on the screen and we can take it forward. All right. So technically, as you all know, there are numerous things that can be used to trade the market. But what actually makes the difference is which one of them fetches us with profit for more number of times, which one of them handles the volatility with the minimum losses. So if you are into day trading, you need to take care of these kind of things as well. Okay, the preciseness becomes one of the most important factor for your trades to work well. So having that said, let me go ahead and share with you all one of the trading strategies that works well using the Bollinger Bands. And I would request you to use this strategy only when the market is highly volatile. Okay, and how do you say that the market is volatile is something that will be explained in the video itself. Okay, now one thing to note here is we will take a contrarian approach to trade the market using this Bollinger Band strategy. Okay, so those of you who are not sure or who are not aware about the contrarian trading, let me quickly explain what it means. Okay, so contrarian trading is a kind of trading where we trade opposite to the underlying trend. So if a stock is in an uptrend, we will trade it on the sell side. And if the stock is in a downtrend, then we will trade it on the buy side. So you might be thinking, this is not done. This is not the right way to trade, right? Well, if you remember and if you refer the charts, you will see that none of the stocks actually keep going up continuously, even though they are in an uptrend or in a downtrend. They have to follow a zigzag way, right? So they have to retrace down for some time for them to go up further. And contrarian trading is all about catching this down move, or you can say catching the retracement. Okay, so I hope you are clear on what exactly contrarian trading is. Okay, now moving on further. When it comes to Bollinger Bands, we have multiple ways of trading them. Okay, if at all you are aware about that. I mean, you can use Bollinger Bands to trade in a trend following way as well. I mean, if the stock is in an uptrend, then you can surely use Bollinger Band to take up a buy trade. Similarly, if a stock is in a downtrend, then you can refer Bollinger Band to find out a trade on the sell side. But just to reconfirm again, this video is specifically intended to trade Bollinger Bands in a contrarian way. and in a highly volatile market. So remember these two things, okay? Contrarian and highly volatile market. Okay, it should not be the case that you start using this strategy every now and later get back to me stating that things are not working for me. Okay, so having that said, let's get on to the chart here and let me explain it further. Okay, right. So here I have around 2 to 3 examples that I will explain. I will be explaining in different time frames. Okay, so this strategy can be used on a 1 day time frame as well, if you are looking into swing trading or positional trading, and the same strategy can be used on an intraday basis as well, wherein you make use of 5 minutes or 15 minutes time frame in order to decide your trades. Okay, so the chart that you see here is the Nifty's chart, the 1 day time frame on the top left corner, as you can see here. Okay, and this is the Bollinger Band. So let me just explain how to plot the Bollinger Band real quick for the guys who are really new to trading. So you go to indicator. This is the TradingView uh, platform using which I do the technical analysis. So you go to indicator, go to technicals, scroll down and click on Bollinger Bands. Okay, once you click on it, it will get plotted here automatically, and you can go to the settings here and you can choose the colors accordingly. The input, let it be the same. Okay, don't change all these things, the standard deviations, the source, the length, let it be the same. Under style, you can change your color and you can change the thickness of the line. So in this case, I have changed the colors and I have made the lines that you see here a bit thicker. Okay, the upper band, the lower band, and the middle band, I have made them a bit thicker. And under visibility, just leave it like that and click on OK. And the result is this. Okay, so as I said, you need to we will be taking the contrarian approach to trade this strategy, right? To trade with this strategy. So as you can see here, this particular thing, Nifty, is it in a downtrend or is it in an uptrend? Obviously, it is in an uptrend, right? Why? Because it has been making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, high lows, and stuff like that. So seeing this, it's very clear that Nifty is in an uptrend. Now we, as a contrarian trader, we need to wait for a candle to leave the Bollinger Band and close outside of the Bollinger Band. In other words, what I mean to say is, if you see candle, this candle, the entire candle, the high and low, I mean, the entire candle is outside of the upper Bollinger Band, right? So you need to find a setup like this when a candle is entirely out of the upper Bollinger Band. Similarly, if you have a particular scenario wherein we have a stock which is making lower lows and lower highs, it means that it is in a downtrend. So in those scenarios, you should look out for a candle which is outside of the lower band. I hope this is clear. And in this example, we have taken Nifty, which is in an uptrend, and we are searching for an opportunity wherein we can initiate a contrarian trade, wherein we can sell, wherein we can initiate a sell trade. Okay, so as I said, you need to look out for an opportunity like this, a candle which is not touching the upper Bollinger Band and it is completely out of the Bollinger Band. So this is an ideal candidate. So once this candle is formed, you need to wait for this candle to close, because only after the closure you will know whether the candle has actually got separated from the entire Bollinger Band or not, right? So in this case, it is doing the same. So this is our ideal candidate to trade. So once this candle closes, the entry point will be the low of this candle. Okay, so in this case, the low of this candle is 18,445.30. So let's round it up to 18,445, right? So 18,445 should be your short entry point. Okay, and your target will be the mean. Now, what is a mean? This orange line that you see here, the middle band
of the Bollinger Band is considered as a mean. Now, what exactly is a mean is the definition can be a place till where we can expect the prices to be coming down, and from there it might take a support and move up further. That point is called as a mean. So in this example, or in this strategy, the mean will be considered as the middle Bollinger Band. That is the 20 SMA. Okay, this is nothing but the 20 SMA. Okay, so your entry will be here. Your target will be somewhere at the mean, which is at the middle Bollinger Band. And one more thing that I would like to emphasize here is don't be rigid on this particular number. You should not be rigid on the fact that only when the prices come and touch this middle Bollinger Band, then only I will book my profit. You can book your profit at this point as well. You can book your profit at this point as well. Okay, so the point is, if you are trading a 500 rupees script, and if you see that you have already been in a profit of 3 to 4 rupees, then book it up. What's the big deal, right? You are taking up a good profit in that case as well. So don't be rigid. Okay, so this will be your entry, the low of the candle, right? And your target will be the mean, that is the middle Bollinger Band. The stop loss can be put at 1% of the stock price. Okay, so if you see that in this case, since we are trading 1800 rupees script, you can put a stop loss somewhere around 1880 maybe. Okay, either you can take the stop loss approach, either on a number format, or you can take a swing high. Now in this case we don't have a swing high, right? We don't have a swing high anywhere here, so we will take the stop loss on the number perspective. Okay, so you can place the stop loss somewhere at around 18,800 maybe. Okay, so right. So that is how the approach would be. Okay. Now, if I talk about another scenario, this is the zeal chart, and this time we have a 5 minutes time frame. Okay. The earlier one was a 1 day time frame. Okay. This one is a 5 minutes time frame. Now, again, let me just go ahead and delete the drawings here. Okay. Now, this stock is also in an uptrend. And why do we say that? Simple again, high highs and high lows. High high, high low. High high, high low. High high, high low. Simple, right? Now we need to wait for a scenario wherein the candlestick is getting completely detached from the Bollinger Band. And where exactly is that happening? This is the candle which is doing that, right? If I increase the size of the candlesticks, it will be more clear, I believe, right? So this candle is the one which has got completely separated from the upper Bollinger Band. It is not touching the upper Bollinger Band at all. So this is the reference candle. And your short entry will be at the low of this candle once this candle closes, right? So the low of the candle here is 245.50. So you can initiate your trade at around 245.40 or 245.30, wherever you want. Okay, so take the help of limit orders, stop loss limit orders to initiate these kind of trades. Okay, so that would be your entry. Your stop loss will be at, above the high. This is the swing high that has been made, right? So this will be a stop loss, and your target will be either at the mean or anywhere just above the mean. Don't be rigid with uh, the fact that you will book your profits only after the mean is being touched by the candlestick, as I mentioned the same thing sometime earlier as well. Okay, so be flexible on that front. Okay, so this will be your entry, this will be your stop loss, and your target will be either on the mean or just above the mean. That is nothing but the middle band of the Bollinger Band, which is nothing but 20 SMA. Okay, so I believe I have made myself clear as to which candle to look out for to initiate your buy or sell trade, where to place your entry, where to place your stop loss, and where to book out your profits. And that is what is needed, right? One more thing that I would like to tell here or mention here is we when we use Bollinger Bands, the most common thing that comes into the picture is the squeeze. That is why Bollinger Bands are being used, right? So whenever we have these kind of more gaps within the upper band and the lower band, it is considered that there is not much of a move. Like big breakouts will not happen when the upper Bollinger Band and the lower Bollinger Band are far from each other. Now, how do people predict that there is gonna be a breakout? Is when these two bands, the upper band and the lower band, they come very close to each other. And the bands coming very close to each other is known as squeezing of the Bollinger Band. So once we see that the bands are squeezing, that is when we know that a breakout might happen. We anticipate that the breakout might happen. Okay, like you can see many examples here, like here, right? This is the place where there was a band squeeze and there was a breakout in the upward direction, right? And if I go back to Nifty as well, and let me delete this, let me minimize the candles, and this is a squeeze again. You see here, right? This was a squeeze, and then you can see that Nifty went up. The breakout was on the upper side. So squeeze is the moment we hear about Bollinger Bands, it is natural that this scenario comes automatically to our minds. Okay, so when you are using this strategy, okay, the Bollinger Band contrarian strategy, please make sure that you should not get carried away by these squeezes. You should not be considering these squeezes at all. Squeezing of the Bollinger Band is something which has to be taken up differently. There is a different approach to it. Okay, and the strategy that we have just discussed in this video, the Bollinger Band strategy in a contrarian way, that is completely different. Okay, so I hope you are clear about this particular strategy. And if at all, if you have any doubts, then do feel free to ask me in the comment section. And one more thing to note here is the setup might be rare. It might be that it's being found very rarely on the charts, but I don't think that that should be an issue because trading is all about waiting patiently for the right opportunity and striking it hard at the right point. And it also depends on the kind of strategy that you are using and how often the setup is generating the buy and sell signals or buy and sell trades. But remember one thing, that you need to obey and stick back to whatever the strategy is telling you. Okay, if the strategy that you are using is not generating a signal, then you need not trade. Never ever force yourself to a trade. Okay, so that's it from my end, guys. And for the guys who have not watched my previous video, I have put up the video card on the top right corner of the video, the eye symbol that you see there. You can click on it and watch my previous video. And as always, would request you all to like and subscribe to my YouTube channel. And please do not miss the ending of this video, as you will get some more information about HYIT that might be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comment section, and I will surely reply back to them. And also, please do not forget to like this video if you liked it. So that's all from my end, and I will see you all later. Hope you all will stick back. Happy trading and take care of yourselves. Bye bye.